We did see a rally. I mean, we saw it turn around tremendously. If you look at the chart, they knocked the hell out of silver. It was down considerably, and then actually within a half hour was in the green, went up, and gold pared back roughly half of its losses. So there was some of that involved. But again, the amount of contracts that were dumped to push the price this low also would trigger other automated sell signals that a lot of these funds will be automated by black box trading systems where levels are breached, they immediately trigger sell stops. And that's what would have happened. So a lot of people were sold out of their positions while they slept at night. And those that were knowing what was coming were able to come in and gobble things up on the cheap. Not all of it, but enough to certainly benefit some of the players who knew what was coming.
Okay, and you're saying this was both gold and silver and done for effect.
Absolutely.
What would that effect be? What would that agenda be?
Well, that's a good point. What is it? And again, some of that would go in line with what we are being told, the conventional wisdom. Look, what matters? Supply is still tight. Central banks are still buying. Nothing's changed. Debt, wars, money printing, it is all continuing. And maybe when you take a look at what's happening around, a government shutdown, being criticized by the UK for the problem with our banks and the fragility within it, problems again that are starting to creep up in the repo market. Gold's getting noticed by Reuters and Bloomberg, and all of this commentary shedding a light on gold. At the same time, things are a mess here in the United States to a degree that I think perhaps maybe the players that have ulterior motives, whether that be to continue to accumulate or whatever their reasons were, I guess to me, it's we're not going to really know, because all I can tell you is that it's as illogical as wearing a parka in Death Valley in July to dump that kind of metal onto the market at the most inopportune time. And it was done specifically, I think, to create an effect. Yet at the same time, what is the motive? What is the motivation? Is it the U.S. government coming in and really not wanting the light to be shown upon gold at that level because they're still trying to accumulate it, or other entities, other banks that are getting margin called, looking at severe stress in the London market, trying to drive the paper price down to protect themselves, to cover their positions? We could pick a million reasons why it's happening, but to me, the why is less relevant as is the how it happened. And in any of these instances, if any of these players wanted to do things legitimately, it wouldn't have been done the way that it was done. It was done to rattle the market. And maybe it was to, the retail investor. Over the last several weeks, I was just in Aruba for 8 days. I never saw the ocean for more than 30 minutes because we were working nonstop. Business has been accelerating tremendously. It's starting to catch the eye of the mainstream and of the public. Maybe that's not what they wanted to see. This was a flush. Now, at the same time, look, a flush, you could argue, would have been inevitable after 9 weeks of going straight up and moving in a way that freaked a lot of people out. Never seen anything like this. But to your point, gold is no longer overbought as it was since late August, which is a good sign. It hasn't quite yet reached oversold, but what's interesting, silver has also confirmed an uptrend. Both of them have been an uptrend of a 200-day moving average, both of them continuing up. We haven't seen lower lows yet, but what we see with silver now is that it has already nearly reached its oversold levels, and that's something very bullish, a technical indicator that should say that maybe the flush in silver has stopped. And in the short term, we should expect it to rebound. We could see a little more weakness in gold because even though both are no longer overbought, silver technically is no longer oversold. Gold, not quite there yet. So from a technical standpoint, Sure, there is some merit in what the mainstream says. The application of how it came about is flawed, and to not bring that up is only telling half a story. And I think that's the part that the mainstream really is divisive about, and why so many people never understand what's happening, because they hear what they're saying and there's logic to it. But if they understood how it was actually implemented, they might look at it with cross-eyed.
Right. And there are some other mainstream reasons that are being attributed to the volatility. We'll get into that, but I think it's much more interesting to focus on what you're saying. And that is to, create a diversion, if you will, that there was just too much attention. Mainstream media, everybody was talking about gold. It wasn't just the financial channels. It wasn't even just the regular news channels. You had like articles in the New York Post about gold. It was becoming a very hot mainstream topic, and maybe getting too much attention. I recall it was Alan Greenspan who used to say that gold is a barometer on the health of the economy and on the strength of the dollar, and you don't want gold to be screaming too loud of a signal there. But,
well, to
sure.
that point, and I'm sorry to interrupt you, the Federal Reserve Chairman was just recently at a summit. I don't know where it was. I heard the sound clip, and they were asking him questions. And I don't know if you have. I'm sorry.
We can pull that up if you're talking about Scott Bessent speaking and being asked about.
No, not Scott. Scott's the Treasury Secretary. I'm talking about Fed Chairman Powell, and he was just at a conference recently, and he was being asked by the moderators, and she said, "Look, this is an audience question, and it's one that everyone wants to know. Would you care to comment on the price of gold?" And his answer was, "No, I would not like to comment on the price of gold." He completely brushed it aside. And so there, look, rising gold has implications, and implications for the United States, implications for the dollar, implications globally. So I think that there's a lot more to it than just what the mainstream is trying to talk about. You sent me an article today that talked about the gold prices fell by 5.7%, and making it the largest one-day drop in since 2013. And they call it a 4.5 sigma move. In other words, such a large move happens in one out of only 240,000 days in a normal world. What we saw in that kind of a drop is highly unusual. And when you realize it was dumped at the most inopportune time to create this type of sigma event, it starts to reek of desperation of creating a narrative where all of a sudden the one that you speak of, where everyone from Reuters to the New York Post is talking about gold. Maybe things are moving a little too fast for the big players, some of which who are still trapped in short positions that represent all but an existential threat to their survival if things get too far out of hand.